Hello and welcome to the Market Monitor. I'm John Michael Riley, OSU Ag Economist. And the week has started off on a little bit of a sour note. Most of our crop markets are down since the beginning of the week. If we think, they'll start first with wheat markets. Wheat prices on the futures market are down about 20 cents per bushel in the past 48 hours. Corn and soybean prices are down about 10 cents per bushel. So overall, some negative start to the week. That can be attributed to a number of different things. We'll start with the weather. We've gotten some rain across most of the growing region, and whether we're speaking toward wheat, which is in development stage to be nearing harvest, or the crops that we're currently planting, a good news for soil moisture, a good news for potential overall yield per acre, but that tends to be a negative in the marketplace, given that there could be, it could add some bushels to the overall supply. So that's been one aspect of the pressure. We've been looking at the US dollar in relation to other currencies. That's continued its trend downward that we've been seeing for the past number of weeks. But the last day or so, in the last 24 hours, it started to strengthen just a little bit. That in relation to what it means to our ag commodities could make our US crops a little bit more expensive to our neighbors overseas that are wanting to purchase those crops, and potentially having some negative implications to overall trade. Combine that with all of the other implications related to trade that we've been trying to digest over the past month and a half, 2 months. And right now the market is just trying to make heads and tails of what the trade picture is going to look like for the remainder of 2025. So all of this combined has put some negative pressure on our crop markets. The good news, going back to the soil moisture, is that we are experiencing some rain, and that has certainly been a positive if we think about what's happening with the wheat crop. Some stories out there that the wheat crop really needed that rain to kind of finish up its development as we move into harvest. So while prices are a little bit suppressed at the moment, the good news is that hopefully it's going to be offset somewhat with regard to yield per acre. Also with wheat, one thing that I've been mentioning in previous segments is the weakening of the basis. And since the last couple of weeks, we have started to see basis strengthen back to normal levels. We're not quite at normal, but we're only about 5-10 cents below normal, as opposed to 20 to 40 cents below normal that we were experiencing in the first start of 2025. Corn and soybeans still having some weakness there, especially corn. Corn basis is the weakest of all of the three commodities that we're highlighting today. And so that is something that we want to continue to keep an eye on. But for the most part, the basis is starting to see some improvements, especially here in Oklahoma. Which brings me to the last impact that I want to mention, and that's the overall broad economy. We're seeing a tremendous amount of uncertainty and turmoil across all of our markets. This is spilling over or trickling down, however you want to think about it, into crop prices, and that's going to continue to be the case. And so I'll leave you with this. In times like these, it's very important to maintain good farm records, good financial records, and to control the things that you can control, especially with respect to cost, when we've got pressure on our crop prices like we're currently experiencing. Well, that's going to do it for me. Look forward to seeing you next time on the Market Monitor.